Conquer the Crash by Robert R. Prechter, Monetary Deflation. Welcome to yourbooksummary.com. Monetary deflation. The hidden danger explained. Understanding deflation. Most people think of inflation as rising prices and deflation as falling prices. However, these are just the visible signs of deeper changes in the amount of money and credit in the economy. Prices go up when there is more money and credit available, making each dollar worth less. On the other hand, prices drop when money and credit become scarce, making each dollar worth more. The cycle of credit and its impact in U.S. history. Economic downturns often follow periods of excessive credit availability. Recently, during the bull market, we've seen a huge surge in credit. Banks have been eager to lend, and consumers have been just as eager to borrow, driven by their confidence and desire to spend. But this can't last forever. Eventually, the sheer amount of debt becomes unsustainable. When this tipping point is reached, psychological shifts will trigger economic changes. Banks will tighten their lending standards, only approving loans for the most creditworthy borrowers. Meanwhile, heavily indebted individuals will scramble to pay off their debts or, worse, default. This will create a vicious cycle of reduced lending and spending, leading to a deflationary crash where credit dries up quickly and public sentiment turns cautious and pessimistic. The misplaced focus on inflation. Most economists are more worried about inflation than deflation. Recently, the U.S. Federal Reserve has cut interest rates to historically low levels to prevent runaway inflation. However, they can't push rates below zero, which is where we're headed. Unfortunately, very few are preparing for deflation because they don't think it's possible. Many Americans feel secure because their bank deposits are insured by the government. But this insurance, funded by the banks themselves, won't be enough when a deflationary crash hits. On a global scale, central banks have also made credit conditions unstable and prone to collapse. In summary, monetary deflation is a real risk that has been overlooked. While the focus has been on preventing inflation, the dangers of unchecked deflation loom large. Understanding the dynamics of money supply, credit, and psychological trends is crucial for preparing for potential economic downturns. I hope you found the information about Conquer the Crash by Robert R. Prechter. If you're interested in learning more about the book, stay tuned for the next part of this series where we'll dive into the next section. Thanks again for watching, and I will see you in the next video.